Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is December 2nd edition of Market Outlook. Well, certainly we closed marginally plus for the month after a harrowing ride. Um, and we're going to cover where we are in terms of the market internals and some interesting short-term price patterns as well, and how we're bounded by a key reference points relatively close by to where we're currently trading. Now, don't forget to sign up for that market survey, participate in it. We'll send you the results. It's a little bit different than other investor sentiment surveys, is that we're a little bit shorter term in nature. So that should add some information to your variety of statistics that you have. So let's take a look at the S&P chart here. One of the things that you can see is that we have in the last couple of weeks moved back over the 200-day, which means that we're confirming a warning phase. Now, the factor is that we stopped exactly right at the 50-day that's declining. But the other interesting thing is that we had an inside day right at that declining 50-day moving average. Now, your 200-day obviously is moving up. We've also had a big accumulation day after that substantial sell-off last Wednesday and a close at the high of the day. So this bullish engulfing pattern and that flush back down to approximately that 200-day moving average was interesting. So we're bounded by both the 50-day and the 200. A breakout above the 50-day would mean that we're most likely going to attack the highs, and Goldman Sachs is predicting that the rally should take us to about 1575 in the underlying futures index. So that's quite a move from here. So again, you want to watch that 50-day. This compression here indicates that a move off and over the recent highs of yesterday and on Thursday, and a power through the 50 could mean a substantial run. On the other hand, you've got that 200-day moving average beneath you as support, as well as the lows from the last couple of days are also can offer some near-term and support, which is the 140, 150 level or so. So that is interesting support as well. Now, the other thing to point out is that we're not overbought nor oversold on the short-term RSI, which means plenty of room to move either way. If we look at the weekly charts, you can see that we bounced off of that 65-week moving average. It's rising. Certainly the intermediate term trend, which we would consider the weekly charts, right? Shorter term is daily, intermediate is weekly, longer term is the monthly, still well intact. Okay, let's take a look at some of the market indicators. First of all, let's take a look at VIX. And you can see VIX still trading inside the Bollinger Bands, so it's neither overbought nor oversold on that basis. However, we are trading nicely under the 200-day, under the 50-day, so overall sentiment in a positive mode where there's no excessive exuberance on either side, and we are trading down under the moving averages, which are a positive. And the 50-day is under the 200, so net you can say sentiment is comfortable where we are without excessive optimism at the moment. Let's take a look at some of the other market internals. Okay, on a shorter term basis, the 10-day advanced decline versus the up-down volume, you can see that we moved sharply from an oversold condition, which we had pointed out that we were deeply oversold, looking for that bounce in the market. We did get it, and we had that attempt at a sell-off, and it was firmly rejected. So you can see the fact that we moved that far off, even though we are at extremely overbought on a short-term basis, that is actually overall a positive. I expect potential some sideways action, maybe some down move, but basically working itself overbought in a sideways to slightly down, and then a recovery. So overall, when you get this type of move that moves that quickly off of an oversold region, it's not necessarily a negative. On the McClellan oscillator, just to review it, we had mentioned that we had been bouncing from the oversold level. We got a intermediate term, which we looking at for more active traders, the 1 to 3 week level. We got oversold. You can see down here, and we had a very powerful rally, 4 or 5% off the lows since that November 16th bottom, and we are approaching overbought levels. But again, you really need to hook down and take out the recent hook to generate a sell signal. So anything is possible, but overall the other factors look pretty positive. So that's looking good. Now another thing I'd like to cover is accumulation days versus distribution days. Now you have a resource on Market Gauge where you can get this information updated at the end of the day. It's under resources and Little Big View. So this is really interesting. One thing to note is that the NASDAQ 100, right, has had 5 accumulation days in the last 2 weeks. That shows strong institutional buying. That is when on up days the volume exceeds the prior day's volume. So that means the market has been under accumulation. And you can see, aside from the diamonds, which is sort of neutral, you had only 2 accumulation days versus 3 distribution days. Really not a read there, but you can see that in the NASDAQ and in the Russell, strong accumulation occurring. If we take a look at some other indicators, let's going to take a look at some of the composite indicators here that is proprietary to Market Gauge. What we do is we take both the Qs and the SPYs, look at the internals separately, and you can see that we have two readings here: the short-term reading and the longer-term reading. The longer term is good for 1 to 3 weeks for mini to swing trades, and the other shorter term tone is good for a day to a couple of days out. So you can see for the first time since September, middle of September, where the market certainly turned at negative to neutral at best through this down move here. You can see you had some constant selling pressure in the in NASDAQ on the short term. We've now turned to longer term positive as well as shorter term. And looking at it, you can see that we've had 2 inside days here. Excuse me. We've had an inside day, which means that you're sort of being squeezed between a declining 50, a rising 200. We had a phase change, right, by 2 confirmed days over the 200-day moving average. So you have this really interesting inflection point, right? A failure under the 200 would take out this compressed 2 days worth of action. On the other hand, a move above the 50-day moving average and the high from Thursday would definitely confirm a up move and a further extension of this. You have a similar pattern, except you can see that on a shorter term basis, we're very, very overbought. Now, again, you can get more overbought, and that is certainly a possibility. Looking a little bit further out, 1 to 3 weeks, you can see we're in a positive mode. We had been negative, we turned positive pretty much right here on the lows, based on this indicator, and it moves so quickly off of those lows that on a short-term basis, as we had showed you in the market internals, that McClellan and the advanced decline on the S&P, a little bit frothy on the shorter term. Now, what's interesting, and the short-term price pattern here, is the following, is the fact that you've had another inside day right by that declining 50-day moving average. You have a rising 200, which we attempted to attack on Wednesday, and it was firmly rejected. So you definitely want to watch the inflection point, which is Thursday's low, which would violate the inside day, as well as put pressure under the high of the close of that key reversal day. So clearly, the 141.50 level, or a little bit lower, 151.35 level, is a critical level. And you also want to take a look at a move above the highs of Thursday, which would also confirm a follow-through move to the upside. So these 2 days is at a really interesting inflection point. You're definitely going to move, you can move pretty damn sharply off of these 2 points. You got a lot of things converging at the same time. So that wraps up this week's video. You've got those inflection points here. Overall, you can see that the market has been acting quite a bit better since that decline. Improvements in phase, markets under accumulation, certainly in NASDAQ. Are we running a bit frothy in the short term? Yes, but we certainly can get more, and the trends seem to be intact regardless of the wall of worry. Thanks. Again, make sure you participate in that investor survey. We'll send you the results. In addition, if you like this video and you like the text and you want to sign up and get this for free every week, go to our website, and at the bottom there's a sign-up box to get Market Outlook mailed to you and your inbox every week. Thanks. Have a great weekend, and see you next week.